Hey everyone, John here from School of Trade. Today we're going to be taking a look at a long here on gold, if it can give us our fill. Looking for an entry at 1347.9. Now, if we zoom out a little bit here, we can see that newsletter target that we were talking about at 46.4 last night for gold finally hit. It hit at 1 in the morning, and you can see the reaction there was just gargantuan. Now, I don't know about you, but I'm not trading at 1 in the morning. But when we come in and I see something like this, where we're holding that area of support, tested it again, held very strongly, tested again, held very strongly, pretty much tested again, held really strongly. We go into a wedge. The sellers try breaking out. They can't even get to it now. We know that there is a massive amount of support coming in at that 46.4 area. And knowing that that is the case, we have a lot of support coming in. We're pushing higher. The sellers obviously gave up given this massive run up. And now we've gone into a range. With a range, we know that we can buy low and we can sell high. But in all context, I really want to be buying low a lot more than I want to be selling high. We know that the sellers are getting out of the market if they're not out already. So any opportunity that the buyers get now, when it comes down, is just going to get bought back up again. So my entry at 47.9 is based off of that fact. I'm looking for the sellers to not have a good argument. They're pushing down. They're trying to break out of a potential range formation after the sellers have already met their objectives. They just don't have a good case anymore. So looking to get long, there we go, 47.9 hits. Now my stop is going to go below that area that we had down there. So if we have this area down here, sell stop right there. That is the newsletter area, 46.4. I'm going to go one tick underneath it, and I'm looking for a target to push back up towards the highs to give us our objective at better to 1 to 1, because we know that we're going with the trend now, right? The trend is shifted. The sellers are out of the way. We should be able to get a run through this high of the range now. So really nice risk reward, beautiful fill on it so far, an immediate snap buying. And again, the big reason behind that is we already know that the sellers, although they may be able to sell up here and somewhere around this area up here, trying to sell down here as a breakout to go back to the lows, there's nobody else left to sell it. Nobody wants it anymore. The sellers already got their objective several times back there earlier this morning. So without any sellers left to carry the move down to that big area of support, we know that two things: we can put our stop underneath it, and second of all, we can use that to our advantage to get into a trade against it, going with the shorter term trend back towards the upside. So buying the lows of the range here, 47.9 is the entry. Looking for the target up at 50.7. Stop is down at 46.3. Seeing the buyers pushing up here once again, very aggressive buying pressure. I'm going to lock the stop in to break even here. They pushed down and they hit our break even point twice. And then when they tried to reattempt it again, they couldn't even get back down to that low. So it does feel safe to move the stop up here, knowing that if they do come back, I probably don't want it anymore. So my stop's going to go to break even now, break even +1 in this case, a little bit of profit locked in. We're waiting for a finalized push up. We are forming a little bit of a wedge here, and this wedge is a slight concern, especially since we held it so nicely back here, but they are trying to break out of it. It is a range, so more likely than not, we're going to push up to the range highs regardless of what's in the way, but it's always good to pay attention to other possible market structures as well. So the possible wedge right here, looking to break out of it. If it does break out of this wedge, then you would expect what you would normally see on a wedge breakout: breaks out, pulls back. The problem with the breakout pullback trying to be a buyer is that we are still in a range, right? So you're still kind of buying high if that is the case. If anything, it's more likely that you're going to have sellers above this high, 50.7 and above, looking to fade into the move, assuming that the break higher isn't going to succeed. Even though we are going with the trend, the shorter term trend is bullish after the sellers have hit their objectives. We're in a range, right? And everybody knows in a range, you look to buy low and you look to sell high, and that would be selling high if you were selling up here. So it's kind of the situation that we're in right now. Overall, beautiful move up. We get the objective filled, back to the range highs. And again, if you're more of an aggressive seller, you could be looking to sell up here, knowing that there's a good chance that you get potential rotation back down again. But just understand, going with the short-term trend is a lot better of an option, and that just goes to show you why. Beautiful run up, right into our targets, and that's going to do it for me. So if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.